Happy Monday. Welcome to Money Mondays with Melissa. Now, this is a special Money Mondays with Melissa because on today, we are talking about the power of banking. And this kicks off on Monday, Money Smart Week. Now, Money Smart Week is a program that was created by the Federal Reserve Bank in Chicago and designed to provide financial literacy programming to all Chicagoans. And we at the Chicago Treasurer's Office have a very exciting week planned, starting with today's panel, The Power of Banking. And don't forget to visit ChicagoCityTreasurer.com to see the rest of the week. We have a full week of planning. Again, glad that you're joining us today because we know that there are a lot of misconceptions out there about growing your wealth, about banking. And so today we're going to break it all down. We're going to talk about three types of banking: personal banking, investment banking, business banking, and everything else that we think you need to know. So to help us navigate this topic, I'd like to introduce our distinguished panel. I have three gentlemen that will be joining me on today. We have Eric Smith, who is the vice chair of BMO Harris Bank. We have Thurman Tony Smith, who is the senior vice president of PNC Bank. And then we have Anthony Majori, who we call Tony as well, managing director at JP Morgan Chase. Thank you, gentlemen, for joining us today. And if you are ready, we're going to jump right on in. And so I want to start with you, Eric. Let's start with BMO Harris, and we're going to tackle personal banking first. Can you talk a little bit why someone should bank with the financial institution rather than like a currency exchange or any other financial institutions that we hear people talking about, especially maybe residents in underserved communities? Can we talk about the advantage of a financial institutions like a bank that we're referring to on the line today?
Good afternoon, and thank you, Treasurer Irvin, for organizing Money Matters. This is a very important series that you've lined up, and it's an honor to be here, and certainly with the other esteemed panelists. As I think about the question that you ask, I really would say that access to banking services amounts to financial inclusion. It's long been recognized as a critical step towards escaping poverty and for really driving toward financial wellness. Having a bank account enables people to protect their savings, to diversify their risk, to lower transaction costs, and to access credit so that they can then invest in the future. This is a really important topic that we're dealing with because I've seen data that from the FDIC that has reported that roughly 6% of US households, or about 14 million adults, were unbanked, meaning that no member of their household had a checking or savings account at any sort of bank or financial institution. Of that population, probably about 40% or so use these high cost alternative financial services, such as money orders, check cashing, and then high cost loan alternatives, such as auto title loans, payday loans, or paycheck advances. I think it's really important for folks to recognize that having banking services through a traditional bank are really essential to their financial wellness. It allows you to manage your budget and to do your own financial planning and to do it in a way that you're able to invest in your future. I also think it's important for us to acknowledge some of the reasons why people have not necessarily felt comfortable using banks. In the past, there have been issues with banks that have charged hidden fees that have made it very difficult and costly for consumers to use a bank. And they have also found sometimes that they haven't gotten the best service. And so I think it's incumbent upon consumers to really look for those banks that have a presence in the local communities that you can go in and build a relationship, because relationships come with benefits. And make sure that you're able to understand the products and the services that they're offering you, because those products and services are there to really help you manage your financial wellness.
Love it. Eric, that was a lot of great information. Tony, let me let you jump in. Tony Smith. Some people, Eric just really broke it all down, right? About the relationship building, about the trust. And he talked about the alternative financial institutions that people are using. We know that some people do not use a bank per se because they feel that they cannot see their money. They're worried that it's not safe. Can you talk about that? But I also want you to piggyback on what Eric said. And Tony of Chase, I'm going to jump over to you after this. But I think all of this is just very appropriate information.
No, and it's such a great and timely topic. I would say I would start with this. Traditionally, banks are the lowest cost source of financial services out there. And when local residents and businesses are excluded from this sector, we essentially drive them to these higher costs and predatory alternatives. And we have to recognize and own up to how we manage our own businesses to make them more inclusive. But what we know for sure is that when we drive them out to these alternatives, it creates a leakage of wealth that streams out of our pockets and out of the most underserved peoples, including a high concentration of Black and brown peoples. And that leakage of wealth is, I compare it to a fire hydrant on a summer day. So imagine that's all your money is going out there and getting wasted. And so we've got to obviously provide alternatives that are more humane and more affordable. And thus Money Smart Week, when we think about it, and throughout the year for that matter, because every week should be Money Smart Week. But the intent was to provide information and skills that broaden one's access to the most viable and affordably priced financial services options, while also helping residents to become more skilled at managing every financial dimension of their lives and managing choices realized in their everyday lives. So across the industry, and certainly all of the banks on this call today have recognized that we have to also provide, comprehensive but modularized financial education curriculum so that we can help our residents to best exercise their financial skills and judgment. And most of us do this either directly or through partnerships like Northwest Side Housing or Monroe Foundation, Black Wall Street, Chatham Business Association, Lawndale Employment Network. There is no shortage of partners that are out there helping with every element you can imagine, from managing a budget to creating a budget to repairing your credit. We share a responsibility for making sure that that kind of assist is available. But we have to couple this with our own products and practices. And for us, that's taken the form of things like what we call our foundations checking and smart access, a secured credit card, both of which are bank uncertified and both designated to help people get out of the payday loan store and other predatory cycle. And then, of course, it means working with our partners in advocacy, our city treasurer, to make sure that we're continuing to evolve and to adapt as needed to make banking equitable. So I'll close on this because it's a great question. We could spend all day just on this. But bottom line is, we have to remain committed to this course to make and earn the trust of too many folks who are evidenced by the broad plethora of literature out there that says there are a lot of low to moderate income peoples, and particularly peoples of color, that don't trust the bank. But that lack of trust is also reflective of the experience they've earned. We got to deliver a better experience. We've got to earn that right to be their bank, and we're intent on doing it.
And so, Tony, we talk about, Thurman just spoke about earning their trust, right? And Eric started the conversation with relationships. How do we, as a financial institution, as a banking institution, how do you earn the trust of residents? What is the plan for that? Just give us some ideas, especially when we see that some communities have lost branches, especially in recent years. And even before the pandemic, right, branches have closed. And people always wonder, how do banks determine where they will open branches? Because some branches have opened as well, right? Talk to us a little bit about that.
Yeah, absolutely. Well, thank you, Madam Treasurer. And it's wonderful to be with Eric and Tony to kind of kick off Money Smart Week. And most importantly, it goes without saying, I hope everybody is safe and healthy out there. That's this kind of crazy time we've been living through. But to kind of address the point, kind of like any company, or kind of think of a retailer where you're constantly evaluating your locations from a real estate standpoint. And we always are evaluating our branch network to ensure that we're like in the right locations, helping customers with their needs, and their needs change as well. So sometimes we may consolidate a branch, to your point, when another is nearby or traffic might be low. And this actually allows us to strengthen the branch network so that it can be successful and sustained, and ultimately serve the community for the long term successfully, as I mentioned. But as we're all rapidly evolving, think of this call right now. I suspect a year plus ago, none of us knew what Zoom was, and now we suspect it's ubiquitous. We all know what Zoom is, and in fact, we're adapting technology. We were forced to adapt at a very quick rate. Within our customer base, our customers have adapted to technology at a very quick rate. So you can think about digital. You think about your iPhone and your Android, the mobile apps that exist today. Think about online on your computer, and think about even in the branch. There's some technology that's been deployed that helps with the customer engagement, the experience, but it's led to less foot traffic in the branch as well. So we're trying to be smart. But with that said, let me just give you maybe an example, and I'm sure the other banks have equal examples, but banks are forced to rethink, how do we support the community through a branch network, but in a slightly different way. So for example, we rethought the branch design and recently celebrated the grand reopening of a completely new, I should say redesigned Chicago South Shore neighborhood. It's really Stony Island, the first to feature a community-inspired model. So it's a branch, but it's also a community center. And that's, I think, where we all of us banks can experiment with this piece of real estate we have that's very important in a certain community, and not just deliver financial services, but actually serve as a hub for the community as well. So for example, that Stony Island branch I'm referencing has a really a new role, a community manager, not a bank branch manager, a community manager that will engage with the community and the local businesses to increase awareness of available resources, connect businesses with each other, solve problems, financial health tools, really be a resource to the community. So what might appear on the surface that banks are closing branches, I think the reality is that banks are trying to best serve customers, both by leveraging technology, as I mentioned earlier, but also kind of reinventing this in-branch experience. And maybe it's not the traditional branch we all remember it to be. Maybe it's something more like the community branch that I just mentioned going forward.
And Tony, there was a grand opening in South Shore for Chase.
At Stony Island, yes.
Okay. That's good to know. I just want to make certain that I heard that. Okay.
Yeah, it's wide open. Thank you.
All right. Now, Eric, let's go back to BMO and let's talk a little bit. And Tony was talking about helping the community, and you opened up the whole conversation with relationships. Let's talk about establishing goals, because we know that a lot of individuals, residents, small business owners, they want to reach their goals, but some people really just don't know how. Talk to us about how financial institutions, how your banks can help people that want to set financial goals, not just have a place to manage their deposits and withdrawals, right, with the bank, which we know those are the basic services, but let's go beyond that. How can you help residents, small business owners set financial goals?
Sure. So I think one of the first ways is to help educate consumers by leveraging the benefits of those relationships with your bank, by working with a financial advisor to really sit down and to lay out sort of what your goals are, and to develop sort of a roadmap for how you achieve those goals. I think it's important for consumers to obviously have the basic checking and savings account and brokerage accounts and credit cards, and to have the digital mobile capabilities. But it's also important for consumers to have a relationship with a bank that understands their personal and individual or business needs. To give you an example, I think, we're all obviously dealing with the challenging year that we've just experienced with COVID and the crisis and the unprecedented chaos that's been created by that, and the hardship. I think one of the things that we tried to do here at BMO was to think about ways that we could help support not only our clients, but also the community. And so we launched late last year an initiative called BMO Empower, which is a $5 billion 5-year commitment to helping to promote inclusive economic recovery. We're doing that by supporting small businesses with a specific outreach to Black and Latinx businesses, particularly given that we see the disparate impact that has had based on the COVID crisis. But we've also allocated dollars for first-time home buyers. And I think that's something that is really, really important. One of the things that I'm sure you'll talk about with our good friend John Rogers tomorrow is the racial wealth gap. And when you look at some of the data that is out there, it shows that the average white household has wealth of about $177,000 compared to only about 17,000 for the average African American or Latino household. That in large part comes from the wealth creation that is seen by families that pass their savings and their wealth on to other generations. It comes through being able to buy a home. So one of the products that we're offering to our clients is really just that, around how to buy your first home. And I think that's really important to really understand. So we're offering sort of a new product that allows you to basically partner with the Illinois Housing Department Development Authority through a program called Smart Buy. And it aims to put home ownership within reach for families in Illinois by removing the burden of student loans. So Smart Buy offers a $5,000 gift or grant towards your down payment or your closing costs, plus it provides up to $40,000 in student loan debt relief. So student loan debt is a common barrier for home ownership, and this program helps you to bridge that barrier and allows more people to reach their goal of owning a home. And these types of home buyer assistance programs are central, I think, products and offerings that are, again, a very good example of what types of benefits you have from a relationship with a local bank.
So you said up to $40,000 for student loans?
Yes.
Wow.
And it's a program that's also able to provide assistance that's available to DACA recipients. And obviously for many residents here in Chicago that are looking to buy a home, having this assistance is essential. The program is expected to assist between 500 and 1,000 borrowers across the state of Illinois.
This is great information. All right. Thank you, Eric. Very helpful. So let's switch a little bit and talk about investment banking. Thurman, I'm going to switch over to you. But if you want to tag team to what Eric said, because it was just great stuff, that's fine.
It's hard to pass on that because he really,
yeah, I think so too. I agree.
Oh my goodness. So let's
Yeah.
face the reality, because you started with what can people do? And you got to remember, it really depends on where you are. And the reality is, particularly low-income families and even moderate-income families of color have very little liquidity going into the COVID crisis, and they have a lot less of it and probably stressed their credit card and other debt. And one of the looming risks out there is, what impact will this 12 to 18-month period that we've gone through, that we couch as the COVID economy, what did it do to credit scores, and particularly for low to moderate income and what we call our BIPOC populations? My gut tells me we need to start getting ready now to help families absolutely prepare themselves for the impediments to credit and other financial services or investments that arose because of the liquidity drain during this particular crisis. So let's put that out there as something that folks are worried about. But then we get to the bigger issue of, how do we create wealth? Now, certainly, there's absolutely every incentive to get as many households engaged in the house acquisition process as possible. But guess what? Only 7% of our entire housing inventory trades annually. That is, 7% of the houses are sold or bought. And less than half of that is the first-time home buyers. So that other 93% to 97% is inventory that's already out there. And guess what? It's not appreciating evenly. That is, a home in the South Loop or in Logan Square is appreciating measurably faster than it is in Auburn Gresham, South Shore, or Inglewood. Further, the basis in that house might be $200,000 on the south side and $800,000 on the north. So even if they both appreciated at 10%, you get $80,000 in wealth on the north, $20,000 on the south. The wealth gap didn't get smaller, it got bigger. And so what do we do to help our families realize the wealth in the homes they own today? And an important part of that is changing how these neighborhoods are perceived, because how they're perceived translates into demand and to how appraisers are looking at these. And we're going to ignore all the other bad behaviors in the appraisal industry, because we know how bad it is out there. We know what we got to do. So, but that said, how do we drive values up? And that's, quite frankly, a good part of that is what we do with policy. So I think, quite frankly, Commissioner Navarra, Commissioner Cox, the mayor, have gotten it right with Invest Southwest, which says we've got to invest in these principal corridors and neighborhoods to essentially stabilize and get them on an appreciation trajectory. I'm translating the language into how do we create value. And to me, it takes this a very simple notion that an important part of transforming value creation in neighborhoods, beyond the obvious public safety, education, what we do with small businesses. You know, we constantly say, look, let's teach a man to fish and he'll feed himself for life. I go, no, help him buy a boat and hire a crew so that he creates a job that creates a legacy wealth for him and his family. And by the way, that fisherman might be a woman who also wants to own a bait shop, which we know what happens. She'll also find a way to make it a cafe and a coffee shop, hire 10 more people, and make that a destination that puts that neighborhood on the map. We've got to change the way we think about small businesses and how critical they are to how neighborhoods are perceived. So I'll close on this comment. Think about Andersonville. You walk 4 blocks, every single storefront is filled, and with everything you might ever want, things that make what we call a neighborhood great. We can do that across our city, and maybe we can't do it all at the same time. So we have to, make some really tough decisions about where we deploy resources. But absolutely, let's think about this not separately, but in the context of how important what we do with small businesses is to the accrual of wealth in our housing inventory and create wealth more equitably for our most underserved peoples. And I'm gonna stop there because I can go on for hours just on this topic.
I love the passion, Thurman. I love the passion. And so I want to, Tony, I want you to jump in on this question. I don't want to overlook this question. I want you to jump in on this question. And I think that I want people that are listening to this broadcast right now to understand that you just heard from Thurman, who is actually from PNC Bank. Not just PNC Bank, but he is senior vice president. And you listen to the passion that he spoke about. Eric Smith, the vice chair of BMO Harris Bank. And now we're going to hear from Tony, who is the managing director at JP Morgan Chase. 3 gentlemen from 3 large institutions, very important institutions in Chicago. And you hear the passion behind their conversation today, which I think is very moving. So thank you, Tony.
Now, thank you. When I jump in, I'll pick up on a couple of themes. One, to where Eric and Tony were going, if we all may compete with each other as banks, but if there's an area that we agree on, it's that we want to improve our communities. And we all know that. And we all learn from each other, we co-invest with each other, we team up with each other. So as some may know, we at JP Morgan announced a $30 billion commitment to solving for racial equity and housing crises across the country over a period of 5 years. And the first place that we launched that discussion is here in Chicago with a $600 million commitment over 5 years. And we're not looking to do that alone. We're looking to do that with all the great things that Eric just talked about and Tony just talked about at PNC and BMO respectively. So this is a group effort. This isn't an individual effort. And you have to have, you can't just throw dollars at it, as we all know. You have to be engaged yourself personally, demonstrate empathy, listen, and then most importantly, design a solution, be part of the solution. And again, not just with dollars are helpful, but also with your human interests. Like you personally want to make a difference. And it's easily the 3 of us do, but I know there's thousands of people that work for all of our institutions that want to do the same. I think one of the questions you were just asking Tony, and I'm happy to jump in on, you were asking about, in investment banking, and I think investing in particular is where you're going, and that creates wealth for individuals. But not all of individuals have the acumen or the resources or have been taught how to invest successfully. So I think an important kind of attributes there to touch on it quickly, we try to help people, first of all, think about if you're managing debt, just helping somebody manage their debt or the cost of debt or understanding the terms of that debt, making sure that they establish a rainy day fund, which typically is 3 to 6 months of living expenses and how important that is, participating in an employee retirement plan or demystifying that if you don't know what that language means, and making sure somebody's taking advantage of those opportunities, and then maybe consider investing. So for example, if you're right out of school or you happen to have a student loan, sit down with any one of our banks and make sure you evaluate those student loan terms. You heard Eric talk about some wonderful opportunities at BMO, and make sure that you're getting the lowest interest rate possible to manage that debt and get some good advice. We talked about the rainy day fund, and well, before I go there, we talked about credit cards, which I think is an important attribute. Make sure you've got your credit card debt under control and you're getting the best rate possible. Again, solicit advice from any one of our banks to help you manage that debt. And kind of in the order of helping you save money every step of the way, and then get to the rainy day fund. Put 3 to 6 months aside if you can, because there could be a car repair, there could be an unforeseen expense that creeps up on you. You don't want to have to use your credit card for that expense. You want to be able to dip into that cash, save the credit card debt for another day. And then when you've got all those bases covered, then consider investing. And maybe it's through your employer's retirement plan. And if you don't understand the language or or it feels confusing or have questions, ask any one of our bankers. We'd love to be able to help. Our website, I'm sure the others do too, has an investing tab on chase.com, kind of demystifies investing in its own right. But most importantly, think about what are your objectives. If this is short term, you want to buy a house, you want to buy some kind of discretionary item, maybe that's something that's more savings related. Investing's for the long term, I think, as we all know. And we want you to be able to invest through cycles and create real wealth over generations. And remember, with investments, you're going to have good days and bad days. The market's going to fluctuate, and you want to make sure you can absorb the dips, but you can also enjoy the gains over a long period of time, and make sure you've got a portfolio that's diversified. So there's not one sector that's hurting you at one given point in time. You're in multiple sectors, again, with good advice from one of our institutions. But importantly, always do your homework, ask questions, be curious. Encourage everyone, as I mentioned, to visit any one of our websites to get good information. You want to be an informed investor before you start kind of dipping your toe into the water.
Madam Secretary, Tony brought up a couple of a lot of good points, but there's one I want to zero in on because it touches so many people. We hear the term 401k or your company-sponsored investment fund. And what people miss sometimes, there are some companies that will match you dollar per dollar, others 50 cents on the dollar. But even if you think about it, if you got 50 cents on the dollar, that's like a 50% appreciation on your investment day one. Day one. Compare that to what you get in the housing sector. You're lucky if over 10 years you get 20% appreciation on average across the country. You already got 50% on day one, and then that compounds over 10 years. And so if you got as little as 1% a year on both your money and your company's money, you're sitting at somewhere around a 65% appreciation. A lot of families think investing in the 401k program is optional. We should not think of it as optional. And if we instill anything in our audience today, is you ought to think of that as absolutely an imperative and mandatory and not optional, because that's your long-term retirement strategy. One that when you couple it with, again, Tony says, do your homework. Good news, most of your 401k type programs are absolutely among the safest and well-researched. A lot of us, like our company, we're not going to let you make dumb investments in that program. We're going to say, no. Listen to the advice of the most seasoned people out there and follow this. And by and large, if you did this, you did well. In fact, if you were in the program when the market went down roughly 24 months ago, guess what? It fully recovered plus some. We're at record highs. And that's not to say that that's the only investment option, but it's one. Plus, the liquidity you have in that program might be the money you borrow against to fund education, to fund housing repairs, and the likes, to fund your new business. So stop thinking of that 401k as optional. Make it part of your, like tithing the church. You got to do it.
So I'll give my personal testimony right here. So first of all of this is such great information. I think what I like is that when Tony began talking about investments, he started with 3 to 6 months of savings, retirement program. Sometimes when we as residents hear the word investments, we think that it's all just stock market. No, you all are talking about investments that everyday citizens can be a part of. 3 to 6 months of savings is investments, right? Retirement program is investments. And Thurman just said something, and I love this when he says, don't think of retirement as optional, think of it as required. Let me tell you this. I was as a first time home buyer in the city of Chicago. This is before I was an elected official. I purchased a home as a single woman. And so, that wasn't easy, one income. I actually borrowed against my retirement, my 401k, as a down payment on my home. And guess what? Interest-free borrowing from my 401k. I didn't have to pay interest on it. All I had to do was like little increments, pay it back. It was so small, I didn't even notice the difference. I'm telling you all, it's amazing. So when Thurman just said, it can help you buy a house, I can tell you firsthand, it helped me purchase my first home. Where would I have had money saved for a down payment? I went right to my 401k, interest free. Now, I'm telling you all, this is great. Thank you. Eric, let's jump in talking about investments as well, because I think this is just all great information. And let's talk about, because a lot of people are intimidated by the word investments. They're intimidated by that. So let's kind of talk about that.
Sure. So I think, just kind of piggybacking on Tony and Thurman, when I talk with families or individuals, the number one question that's often asked is for advice about how much money to spend versus how much to save or invest. Basically, they want to know how to be able to afford, a vacation or to have some family fun while still being able to pay your bills and being financially responsible by investing in the future, whether that's buying a home or saving for college or planning for retirement. The best advice that I usually try to give people is the 70% budget rule, which is a monthly budget guideline that will help you throughout your life to know exactly how much to spend, save, or invest, no matter what your income, whether you're living paycheck to paycheck or whether you're a corporate executive, no matter what your debt burden may be or your income, or what stage of life you may be in. Essentially, it's a very simple formula. You take your monthly take-home income and you divide it by 70%, which will be the allocated amount that you give for monthly expenses for things like food, rent, your medical bills, your car, your gas. And then you look at 20% and you make sure that that goes into savings, unless you have a significant amount of outstanding debt, in which case you would probably put that toward some sort of debt reduction. And then last, but certainly not least, something that's really important to me, going through this past year, is thinking about that last 10%. And for me, that 10% is giving through my tithes and offerings at church as part of your time, treasure, and talent. Or maybe your choice may be to do some sort of charitable donation to give back to the community. Or you may choose to put that additional money into some sort of retirement plan or saving for college or investing. But having that simple formula in life, I think, is very, very essential. It's something that my grandmother taught me early on as a child and that I've really benefited from. And I think we are able to teach that sort of financial literacy to others so that they have that financial freedom for economic equity in their future.
I love it. And by the way, I want to special note we're going to ask one more question of the panelists. But if there is questions that the audience have, and by the way, I saw a few questions. Obviously, when we start talking about mortgage assistance, everyone starts asking questions because that's building generational wealth. Everyone wants to talk about that. So we're going to answer those questions, but please make certain if you are interested in more information about the mortgage and rental assistance to go to chicago-city-treasurer.com so you can sign up for Friday's session, but we are going to get to those questions. I also want to make a mention that we have these three gentlemen on the line. We spoke about BMO, PNC, as well as JP Morgan Chase. All three organizations are a part of the Advancing Equity and Banking Commission. So I got a question for them on that. But my final question to them, and continue to ask questions through the chat, through the question and answer, and we are going to get to them. But our last question, I want to pivot a moment. We spoke a lot to residents and even small business owners could really benefit from what we just discussed. But I want to ask a specific question about business owners. And Eric, I'll start with you. Let's talk to those small business owners who started their business and just went online to open a business checking account. and kind of called it a day, right? Why should they be developing a relationship with a banker? You spoke about relationships. What's the benefit of that?
Sure. No, relationships are essential. And I think one of the things that you get from that relationship, there are three things. The first is better access to education. Working with a bank, we can help you achieve real financial progress in your business through practical tools, webinars, and coaching. To give you one example, as part of our special loan program that we're offering to Black and Latino small businesses, we're partnering with the Chicago Urban League and the Illinois Hispanic Chamber of Commerce to make sure that we can provide that coaching and advice that consumers quite often may need as they're looking to navigate through these very difficult times, whether that's through a loan application or figuring out how to put together your business plan. The second benefit that I see is really better access to capital. And that's really whether you need additional cash flow to cover overhead expenses, or you're looking to expand your product offering, you may just simply need capital to support your business growth. And if you're new to the process, applying for a loan can be, very stressful and overwhelming. So working with a banker can help to demystify some of the lending, processes and steps that are required to really reach your financial goals. The last benefit that I see is really better access to partnerships. Working with your bank, we're able to form partnerships with organizations to give you access to meaningful networks and alternative sources of funding. To give you an example, we may not be able to provide a traditional bank loan, but we can refer you to one of the local CDFIs in the community, a community development financial institution that has the resources that are available. Another example would be perhaps you're an exceptional small business that's looking for an equity investment to grow your business. At BMO, we recently launched a new social impact fund, and our first investment was with Don and Liz Thompson as part of the Cast Us initiative, where they're investing directly in Black and Latino businesses here in Chicago to help them grow. They're looking at small businesses that are in healthcare or in technology or in food services. And being able to have a banking partner that can refer you to other partners that can help you to grow your business is essential. So relationships matter, as they do in all things, Treasurer. And I think that it's really, really important to partner with an institution that can provide you with those benefits.
Herman?
Yeah, I'm going to start with bit of data first. What we know right now is some 80% of the capital needs of small businesses of color goes unmet every year. They're 17 times less likely to get equity capital than a white business. So we can call this structural racism, you can call it whatever you want, but sometimes the issue is embedded in the policies and practices of their lender. We manage risk. The tables tell us this business has a higher default probability than that one. We have these comprehensive credit scoring and credit filters that, quite frankly, are oftentimes based on what we would call archaic systems that never fully took into consideration that there was a bias in it that disproportionately affected businesses of color. And so we have to own that. And there's a great work out there by Richard Rothstein that really gets into segregation by design, but essentially observes policies and practices that informed how we invest and lend money today. And we have to own that, and we're getting on it. And I'm very confident, by the way, that this incredible and intense lens that has been put on social equity as it relates to businesses is being realized in companies across this country, and certainly at the three banks at the table today. And so, yeah, we're still in the throes of modulating all of our own practices to get there. And that means how we staff our positions. We got to have people that look like us. We have to have policies where we are in each other's face going, hey, I know lending to contractors has had more defaults, but guess what? When we look at where Black and brown businesses are, there's a high concentration in home healthcare and some certain other businesses. Guess what? We got to rethink about, any of these devices we have out there that disproportionately affect those businesses. So this is taking ownership of that. And again, expressing a high level of confidence that we're getting on top of that. And I see this happening across our industry. And when Eric got appointed to his own position, Eric, you have to know there were guys like me that were just cheering, said, "Oh my God, it's about time," because we need you there. We need leadership to come from the top. But I will tell you, this culture of ownership is being embraced, and I have no doubt that Tony over at JPM Morgan Chase, they're doing it. We're seeing that it's absolutely finally, and it's got to do more than trickle, by the way, Madam Treasurer. It's got to do more than trickle. We've got to be very aggressive and intentional about how we change and evolve as an industry to do it better. But then when we get more specifically to small businesses, it's about recognizing a lot of things. You can come to a bank. Having that relationship is absolutely important. We're also going to be able to help you access the SBA, the USDA, the Department of Commerce and Economic Opportunity. Oftentimes, a lot of these governmental programs require that you go through an intermediary. And we know that we still have to earn your trust, because when you get turned down, you don't necessarily want to go back. It's not a great experience. But the lens has never been more intense. Now is the time. Let's make sure you have access to the most humane and equitable and empathetic capital out there. And I guarantee you, Madam Treasurer, there's more to come, because we can get equity capital, in particular to these companies with sales of $1 million or more. I want to get to those companies with sales of $100,000 or less, because guess what? The highest concentration of Black and brown businesses have sales of less than 250,000. They have 2 to 3 employees, not 10 to 100 employees. We got to make our neighborhood stronger, and we're going to do that by enabling and empowering small businesses. We're committed to that course, and we're already changing those underlying filters that decides who gets credit or not. We have to own that. We got to make it happen.
Being intentional. That's what Thurman was speaking about, being intentional. You see how Thurman broke down the difference, right? If we really want to focus on small business owners, especially those in Black and brown communities, underserved communities, we know that certain income level, as far as the business, we got to lower that income threshold if those are the people we want to focus on. We have to lower the number of employees threshold if those are the type of businesses we want to focus on. So that is being intentional. So thank you for that. And Tony, if there's something to add to this question, I also want you to tag with that what you see as probably one of the biggest mistakes that you see small business owners make. And we're not going to leave it there, right? We're going to talk about maybe what should they be doing instead.
Yeah, that's wonderful. Great commentary from both Eric and Tony. And, I like the be intentional component for sure. And I think just, we all know small businesses drive our our state and local economies, our communities, that they thrive on it. And we touched on my comment earlier about the 30 billion that we've committed across the country over 5 years, but also Eric hit on something which back to be intentional. We've also committed $200 million to John Rogers and Melody at Ariel as part of co-investing and helping with capital and ownership. And I think similar to what Eric talked about with Don, this is great. Again, we are not competing with each other. We are helping each other. And I think what we're seeing across our client base, just to take a break for a second, is this is addictive. Our clients want our advice as to how they can invest better directly. So we've got industrial companies out there that want to think about how to have a more diverse supplier universe. And how can they learn from any one of the banks on this call? So this is like a string on a sweater in a good way, which is there's a lot to pull here. But the only way you pull it is by doing it together and sharing and comparing notes. And the winner is all of us. There's not one individual winner. The winner is truly all of us. The beauty is there's a lot of positive energy and intent to want to make a change, which I think is super important. On the comment about the biggest mistake within small businesses, I think, Eric touched on something earlier about have a relationship. Have a relationship with your business banker at a branch level. Present your business plan. Have a plan. And make sure that you've road tested that plan a little bit as it relates to what if I have an off year? What does that look like? Do I have the capital? What's that shortfall look like? But also separate your personal from your business expenses. What we've noticed, people kind of intermingle those concepts, and they ought to be separate for tax and documentation purposes and for the viability of getting a loan. The banks are going to want to see true business expenses and income separated from personal. I would also suggest, and this has risen quite a bit the last year, fraud has increased dramatically. And so no matter what account structure you have, now I think if you're a business and you're in a business banking like account structure, work with an institution that can help either prevent or look over your shoulder as it relates to fraud. There's quite a bit of fraud going on out there, and that can be very decimating to a small business that's experienced fraud. And then I'll finish because I know we're going to run out of time. Leverage your business banker for advice. I think Eric was kind of hitting this theme pretty hard. Do not be bashful about sitting down with your business banker. Many of the bankers in this community they're residents. They're living in those local communities. They want to make a difference. They happen to work for a bank, and they have strong local networks. They have great referrals, knowledge of maybe not just the community, but maybe various industries. Tony talked about contractors. How do we help you get a contractor loan in a certain community? And these business bankers in those communities do truly want to make a difference, and then help you with research to assemble your business plans. Don't be afraid to ask for help, would be my point there.
So much great information. And by the way, continue to send your questions in. If you have them, we are going to get to them in about 3 minutes. I do have one final question because I mentioned to you that the 3 banking institutions we have on the line today, JP Morgan Chase, PNC Bank, BMO Harris, they are a part of the Advancing Equity and Banking Commission that myself as Chicago Treasurer is partnering with Illinois State Treasurer Michael Therix. This is a commission that is specific to talk about disparities of the Black and Brown communities and to address the social economic disparity. And we want to talk about that, but we also want to come up with solutions. And so I'm always want to promote that and really commend these institutions to say, we want to be a part of the solution, things that they're doing. And we've heard that throughout this segment. But I want to close with this last question because we know over this past year, we talk about the pandemic, and there's so much beyond that, right? So much racial injustice that has just blown national news. And certainly as a Black and Brown person, we say, the racial injustice is not new to us, but the awareness, right? More people are becoming aware of the racial injustice. And so I want to ask this question, talking about the pandemic and the disproportionality affected Black and Brown communities last year. We talked about the civil unrest around systemic racism. Let's talk about what role banks can play and what roles you are playing to help. Number one, we talk about building trust within the communities, but then also we want to talk about what you are doing to support the communities. And we know that support is going to help build that trust. I want to start with you, Thurman, then Tony, and then end with Eric.
Well, happy to go first here. First of all, whatever we're doing, it shouldn't have taken the incredible intensity of this social movement or pandemic crisis to get us to do the right thing. And I feel privileged that I'm part of a company that, for a variety of reasons, we're deployed across our people, processes, programs, and policies to reflect the communities that we want to serve. It's why we invested in, for example, the Whole Foods in Inglewood or Pierce House for La Casa Norte, which houses the homeless and has a federally qualified health center on the ground floor, Howard Brown, and the Hatchery and others. It needs to be a part of your culture. But as we entered, or I should say, as we plan to emerge from this COVID economy, we know that it's had a disproportionate impact on underserved communities, and let's get right to it, to Black and Brown communities. So we have to do some things different. So things that we can do. We can adapt our credit filters to more reasonably account for all of the behaviors that were disproportionately disjointed during this economy. We got to think about how we do it and be ready to do that. We'll be launching some other things. I wish this were 3 days later so I could tell you what it is, but I will tell you this much. We know that we can save our LMI, in particular, consumers, a lot of money by simply adjusting how we charge for certain types of things that are more typically realized by Black and Brown and low-income peoples. And we've made a decision to do that. So more to come on that. I promise you, I will call you on Thursday morning and say, I finally got permission to talk about it more vividly. But think about our business and think about behaviors of low-income people, is trying to manage monies where they have to make choices. Do I eat, or do I pay the electric bill, or do I, drive my car? Do I pay insurance? They had to make some really tough choices. Many of these which translate into impairments or liquidity issues that were just incredibly heavy, and there wasn't enough subsidy money to cover all of that. We can do better, and we will. And I have no doubt, as an industry, if I do it, Eric's going to do it the next day, because he'll get his team going that fast. So it's like, we don't have an advantage.
Good competition. That's good competition.
It is good, but it gets to Tony's point. Guess what? We know no one of us can do it all alone. We're going to do it together. I love the fact that Eric pointed out that IDA has rolled out this, and I'm so proud of Kristen Faust, who comes out of Neighborhood Housing Services, so she really gets this connection. Paying down student debt and having essentially bank products and down payment assistance that links into that and recognizes that critically important. Right product, right solution, right time. I love it. I hate that Eric is there before me, but that's okay. That one day a rule goes both ways. So I take your notes, brother. I want you to know that. And then lastly, I would say this. When we get to our small businesses, I can't pound this enough. If we're going to change how we perceive neighborhoods, and we're going to help our neighborhoods recover, if we're going to grow wealth and do it all at the same time, then we've got to change how we perceive neighborhoods as we pass through or to them, and make them places where people want to live, learn, invest, and play. Because if we do that, we're going to increase the value of that real estate. We're going to make those families wealthier, and perhaps, in the best of all worlds, create the legacy wealth that they can transfer to their kids.
Go ahead, Tony.
No, thanks. That's well said. Hey, to your first point, just to state the obvious and simply put, hate has no place in society. We all know that, and including with some of our Asian American friends over the last few months. So it's just that simple. And I think, our firm's been in the Chicagoland area, the state of Illinois, for 155 plus years, and we will for another 155 plus and plus and plus. And so we're deeply committed. And what I've actually coming out of this very difficult chapter, what I've enjoyed seeing is the engagement with our employees. And I'm going to kind of just go a slightly different direction, because I think Tony hit on so many great points. The engagement from our employees, we're having more discussions internally as a family than we've probably ever had on what can be perceived as difficult topics. And I think that's very healthy and makes us better in our own communities. It makes us better bankers and better business people for all those wonderful communities that are out there. So we're very focused on jobs and housing, as you can imagine, as I think the other institutions are. We think it all starts with having a job that pays a fair wage and having a safe environment to live in. And so that's where we're spending a lot of our time in underserved neighborhoods, is around jobs and housing. But again, I think that's consistent with others. But I go back to the hate comment. That is not who we are. It's certainly not what anybody on this call would exhibit. And so I've enjoyed unpacking with our employees, our clients, our prospects, the fact that we're actually talking openly about some of the challenges that exist. And it's not just a perception, it is real. And then what are we actually going to do about it? And it's not something that you fix overnight, but it's something you certainly fix along the way with each other with intensity. So just the focus, I think mentioned it earlier, Madam Treasurer, with intent. I think with intent, have the discussion with your family. That could be your employees, your clients, what have you. If you don't have the discussion, you'll never fix anything.
Absolutely. Eric?
Thank you, Madam Treasurer. And I'll maybe just echo a point that you raised at the beginning of this question. And it's really acknowledging some of the challenges that we have. We all have the benefit of living here in Chicago, one of the greatest cities in the world. But with that said, we are still one of the most segregated in the country. We know that there are communities that have been underinvested in over the years, and it has led to the tale of two cities. And so we have to be intentional on how we think about coming out of this crisis and coming through it in a way with bold and transformative changes. One of the things that I'm most proud about here in Chicago is that we have a proud tradition of having a public-private partnership that works together to tackle big issues. And so we need to make sure that we're focused on how, as a bank, we can support and invest in education, how we can support small businesses, how we can support our minority businesses in order to ensure inclusive economic recovery. We have to make sure that our business practices align with the commitments that we've made in terms of the capital commitments that we've made, as well as our hiring practices. We have to make sure that our senior leadership, all the way to the folks that work in our branches, look like the rich diversity of our communities. And so these are very important times that we live in, but we know that we are a resilient city and a resilient country, and that we will come through this better and stronger. And I thank you, Madam Treasurer, for your strong leadership during this very challenging time and making sure that we're having these important discussions that allow us to talk about the ways that we are going to tackle systemic racism and the structural barriers that have existed in the banking community that have held back people from reaching their economic potential and having economic equity.
I think it's important what you just spoke about. Um, we acknowledge it's just everything that has happened during this pandemic and civil unrest, racial injustices, you name it. But what I want people to realize that are watching this is that we have three of the largest banking institutions in Chicago. And we don't just have the banking institutions on the line, we have top executives of the banking institutions on the line. I think that's worth mentioning because what we've been looking for as residents, we've been looking for a commitment. And so we talk about being intentional and to hear the leaders of these banking institutions on the line, I think that it's important that we understand that it is a new day. And so, Tony spoke about Chase being in Chicago, at least because Chase was before being JP Morgan Chase, right? We had Bank One, we had First Chicago, you name it. So he spoke about over 150 years. Over 150 years, none of us was here then, right? So we talk about years and years of years and years of social and economic injustices, years and years, so many we can't count. And so there's a lot of work to do. But when we have top executives who are not afraid to come on the line, talk about what they're doing, each of these organizations, and by the way, they are competitors, but saying, look, there's a time when we have to come together. Certainly, all three of them will want you to bank with them. All three of them will want that. But they're saying we have to come together. And so I appreciate not only their partnership with Advancing Equity and Banking Commission, but I can't tell you how many times that we in the Chicago Treasurer's Office have done a panel such as this, and we've had top executives. I don't even think residents probably would say, when have we seen this before? We can't count. That's how many times the top executives have willingly said, sure, we'll come on and talk to residents. Sure, we'll come on and answer the difficult questions because we understand that it's a new day. So thank you for that. And we are getting to questions because there were some questions about, let me see here, obviously about the mortgage. That's always a hot topic. But someone asked a question about if they can participate in the Smart Buy program if they have more than $40,000 of student loans. Now, we're going to talk more about that Friday, but I would almost assume, Eric, and you spoke about this, and then they want to know how to learn more about the program. I would assume that, first of all, you can have more than 40. Well, I can't say you can have more than 40 because remember, with everything, they're looking at debt to income ratio, right? So yes. You keep all that in mind, but that within the parameters, it's not set that you have to have less than 40,000 student loans, I would assume, but go ahead.
That's correct, Madam Treasurer. And the program is really designed to provide relief to consumers who have significant student loan debt. The reality is that many students that are graduating from college have far more than $40,000 in student loan debt. But this program, based on the eligibility and the credit rating overall, will allow for relief of up to $40,000 of that student loan debt. And we believe that that's a really important tool for how people can begin to get into the society and to generate more savings and to invest in their future by being able to buy their first home.
Thank you. And again, go ahead, Thurman.
I was going to say that number, that 40,000, wasn't just random. It also tends to reflect the cost of going to a public college, and particularly a public college in the state of Illinois.
Right.
Understanding the fact that it can be deployed further. Now, my daughter went to an HBCU and went to Spelman more specifically, and I went to USC. So, where the tuition was $80,000 a year. So, but I'm going to tell you, getting $40,000 worth of relief is significant and can certainly be the difference between being able to afford a home and not. So, again, tremendous recognition to Ida and to our partners at Eric's Bank, but no. I'd say that with absolute sincereness. It is critically, and it's going to make a difference, particularly for peoples of color that were absolutely reliant on debt as a vehicle to get something as important as a degree.
All right. Anything else, gentlemen, before we close?
Thank you so much, Madam Treasurer. This is wonderful discussion and organizing it. And I couldn't have picked two better partners. I have a long history with Eric that goes back a number of years, but Tony, has been wonderful to have the three of us together. So thank you so much for pulling us together.
Likewise.
Yes, thank you, Madam Treasurer. We look forward to partnering with you in upcoming events as well. And thank you to Tony and to Thurman as well.
Awesome. All right. Well, that is all the time that we have on today. Thank you to everyone that attended. And certainly, again, a big thanks to our panelists. We will be sharing additional notes and materials with you if you register through email. So if you join us on Facebook Live, always remember to register as well. And you can go to Chicago Treasurer Melissa Conyers-Ervin, Facebook, Instagram, or Twitter to make certain that you're able to register for these events, because when you register for them, we actually send you additional information after the event. So again, for the rest of the week, go to chicagocitystreasurer.com/Money Smart Week, where you get a full list, a full week. And again, follow us on Facebook, Twitter, Instagram, and LinkedIn. Sometimes I forget to mention that. And so we look forward to seeing you for the rest of the week. And thank you again. And we are just excited to see what's to come.
Thank you. Stay healthy.
Webinar, you may now disconnect.
Thank you, Madam Treasurer.
Thank you. Bye, gentlemen.